physical too. Nigga, sugar they high, get that hype, shake like a Nike hat. Yo, I got the Midas pack. Told her be quiet, relax. All right. Let's do a top-down analysis. Just another fine example. We're gonna do this from the top down, and I'm gonna do this all the way from the top, man. I'm gonna come from the monthly with this one. All right, so I already got this shit drawn up. This is pretty much how I'm seeing this thing. As you guys know, a couple patterns I look for. It's only 4 of them really. Rally in price, a base, and a hard drop in price. Rally, base, drop. I come to the basing candle. You can include the wicks if you want, but in essence, drag that bad boy over. That is my zone. Rally, base, drop. That is a supply zone. That is a sell signal to me. When price comes back and hits this area, as you can see, usually a lot of sell pressure. Traders push it down. We come back up. They push it down again. So on the high end, this is, a supply zone we're going to have to get through, right? Demand zones. And pretty much what I'm doing, I start from current price and I look up and look to find a supply zone, supply pattern rather. And I start at current price again and I look down to the left and I'm looking for the most recent demand zone. So this is another pattern that I look for to see as a buy signal. Rally, this blue candle here, rally in price, basing candle, rally in price. Rally, base, rally. That pattern right there, usually within that basing candle, that is the zone. Within there's typically some buyers, right? And you got your MAs here, which that's awesome. If it just falls in there, that'd be awesome, right? This little bad boy right here, this little wick, that's a bit of a demand zone too. Some people call that demand, right? I didn't highlight it because it's not very strong, but I'm not gonna negate it. I am aware of it, right? So let's go on down to the weekly. What do we got here? All right. So first and foremost, starting at current price, what do I see initially? Up and to the left, rally, base, drop. Rally, base, drop. So that 1, 2, 3, that pattern right there, I believe if price comes back up into, let's go ahead and highlight it real quick. I believe if price comes back up into this area, these price points, I believe that you're going to have a pretty nice decline. Typically, the length of the exploding leg out, the candle, which is the leg out, you typically get that run. I like to come to the open of that pattern, right? And go ahead and enter my position short with a stop loss, approximately 10 to 20 pips above this candle here, the wick of that candle. Go 20 pips if it's like an exotic pair. Anything that doesn't have an American dollar in it, I consider it exotic. That's just my thing. So yeah, from here we come on down, and then these blue lines are points of support and resistance in my mind, where I think we're gonna have some a problem. We're gonna get there, and price is gonna wiggle around and see if it wants to go above it or stay where it's at. So like I said, from current price, go up and to the left. This is the first sell pattern. If I come on down, this is the first demand zone. Rally, base, rally. That right there, I think when price does finally come in here, I personally believe we're going to have a nice explosion up out of there. Okay. If I go on down a little more, boom, daily. And in essence, I'll pretty much start seeing these same patterns and within patterns, right? So another thing I see here, if price comes back up to this candle right here, what is that? To me, that is a big bearish engulfing candle, right? So the zone for me on that is here, the open, 96.27.8. And let me just go ahead and say this right now. I'm a quarters theory fan. So anything that's around the quarters being 96.25, 96.50, 96.75. And here's the thing, I like the fives around the quarters. So at 25, I like to enter and exit on the 20 and the 30. When I'm looking at this 75, I'm looking at the 70 and the 80. 50s, I usually don't, 50s usually get smoked, in my opinion. I don't really fuck with 50s. But that's my take on that, right? So price come back up. I'd love to, play the open of that bearish engulfer. And again, put my stop. I consider this exotic. I know they like to get retarded with the spread. If you're going to be swinging this thing at 2 o'clock, they get stupid. Some brokers have you 20, 30 pip spread. So, you want to account for that. So yeah, I'd enter here. I'd have a stop loss up here somewhere. And I'd ride this bad boy down. Ride this bad boy down to the first opposing zone, which is, like I said, on the higher time frames, which is this thing. Now, how long does this take? Anywhere from 2 to 10 days typically. I'll hold the position. Yeah, I do a little swap, but usually you're getting stupid pips, so it doesn't even matter. And then just to go even further, I'm not going to go any further this 4 hour right here. I just want to show you guys this pattern again. Where are we at? Here, I'll show you guys a little secret real quick. I don't like to share this, but this is my little secret time frame. That little pattern right there, right? That candle, that's a bullish engulfer, right? Drop, base, rally. So that's confluence to me. Now, I don't like the fact that price came this close to the zone and didn't enter it. When it does that and starts bullshitting before the zone, typically they'll come and they'll smoke it. They'll smoke the zone, wick right past it, suck back up, close inside the zone, and then take off. So, when I see the shit like that, let's say if I was usually going to risk $100 on a trade, I'd risk 50, right? If it comes in and starts respecting and I start seeing some bullish engulfers on the way out, then I'd throw the other 50 on with the stop below the whole zone. Just techniques I like to use. Also, another thing, real quick, if you're going to be, say, risking $100 altogether on a trade, risk $50 2 times. When you get 1-to-1, close one of the trades, right? That way, the other one, let it run. It's a risk-free trade. Just a little side note. Let me go a little further here. I don't want this video to be too long. Oh, man, that is so beautiful to me right there. So this thing, I'm going to get a little red line in here. That right there, that whole pattern right there, that's beautiful to me. This rally, base rally, right? The zone is fresh. They never came back and got into this zone. That is a bullish engulfing candle. So all that kind of shit right there. Let's see what it looks like on the line chart. Yeah, a little bit sorry, sort of. Not that pretty, right? And look, guys, it's within the quarters. You know what I mean? Of course, I want to take it. It's the 8. I'm gonna literally take the 93.80, a little bit above the zone, take care of the spread. 93.80, and what's the low? 93.48. I'm gonna put my stop on like the 93.40, maybe 93.34, right? 40 pips roughly, and you're going for from the 93.80 up to the. Let's go back to this. I'm going to my first opposing zone here. This is this zone we're playing right here. If this happens this week, right? I need to do that. So let's say we come here. I'm thinking of taking this thing all the way from here to 93.80 up to this here. I don't want to try to get pushed past that. I know it's some sellers right here. The 95.70, let's say the 93.30, 93.70 to 95. Yeah, I mean, it's a couple hundred pips, man. So you guys see where I'm going with this. This is how I'm possibly going to put some trades on this week. I will play any pair personally. Not any, as long as the spread's under like 5 pips, I'll deal with it. I'll take it. But that's about it, guys. I don't want to take up too much of your time. This is probably the longest video I've ever done. This is ultimate top-down analysis from the monthly time frame. Just want to give you my opinions, let you know how I see the market. And I'd love to hear some feedback. How do you see the market? How do you see this playing out? What would you do? Anything you'd add on, anything you take off, please give me some feedback, man. We can always learn. We can always learn, guys. Thank you for your time.